Welcome guys, it's day 13 of the 60-day DAS Trader Challenge. A good day overall. Didn't take too many trades, only had, was it 24 tickets, so 24 executions. So not necessarily 24 trades. I think that would have been broken down by divided by about 3 or 4, and that's how many trades you get. So about 6 trades is what I took. So that's a really good day, just a really good number. Nothing excessive that kind of got out of hand, and really well managed. So today was a day of good discipline. I took small size in most of the trades that I took, with the exception of one which we'll go through in a second, which I think was AAL, but mostly 200 or 300 shares. Good risk management. In other words, I knew where my stop loss was going to be, so if the trade went against me, I knew my maximum loss. So let me just go through that with you. So I'll show you what I mean. So once again, I've got my daily summary in front of me. So let me go through the trades. Oh, my P&L for today is $311. So AAL is what I lost on. I took a big position on that, 500 shares. The other two, which were good, solid trades, was HAIN and ORCL, which had a really big sell-off at the open. And on WB, I made a bit of a loss on that as well. So in terms of the trades we took, and I'll show you where my stop loss and target is as well. Actually, doesn't this make for a nice change when it's not even, it's just under halfway of the size of the window. Normally this is filled in quite long, so it's nice to see it nice and short. Makes it easier to analyze later on as well. Okie dokie. So let's start with WAL. So I'll just sort this by symbol order. So AAL. Okay, so I lost a bit on this, I think, if I'm right in saying. Yeah, I lost $160 on this, and I traded it again, and I made whatever the sum is of this, $26.50 plus 18. What's it? 40, 46, 56. About $64 I made back. So I lost 160, made about 64. So I was down about $100 on this across 2 trades. Now, I got in short at just under $50. Now you got to remember, $50 is a very strong psychological level. Even if there's no support or resistance there explicitly drawn on any daily chart, you got to remember that $50 is a very, very important number, because people put a lot of stop losses around that figure. People put a lot of buy orders or a lot of sell orders around that that price. So that has a really big bearing, and I thought, okay, it's reaching this. So it broke down, so the first 5-minute candle, it broke down below the VWAP, it couldn't get above it, and it closed just above $50. And I thought, okay, if it's gotten so close to $50, it only takes 3 cents for this to get to 50, and then it just, if it has a little crack, even cracks just a little bit under 50, it's got the potential to go down to here, to the 50-day simple moving average, which is at $49, say $49.50. So I was looking for a 50-cent upside, and my stop loss would have been, so let me just figure this out. So 50 is where I got in, $40, $49.50 is where I would have gotten out, so 50 cents gain, and my stop loss would have been pretty much, where are we? Pretty much at VWAP, pretty much. I probably would have used the 20-day moving average, which when you think about it, upside 50 cents or potentially more, because if it gets the momentum to the downside, it can go past 50. And if it breaks if it breaks $49.50, and you get that really strong wave of selling pressure, which can easily drive it down to $49 as well. So my risk reward on this was 1-to-1. So not exactly a very good risk reward ratio in terms of 2-to-1, 3-to-1, because I'm looking to make 50 cents, but I'm also pretty much risking 50 cents if it goes back up to VWAP. So 2 things that could have been improved here. 1, my entry could have been better. So if my entry had been really close to this 20-day moving average and the VWAP, that would have been a perfect entry. But I couldn't get that. Why? Well, because it never reached that up high. I mean, if it had made that move upwards here, then that's an area where I would have added on to my position. But when this candle opened up here at $50.50 and it closed here at $50.08, it didn't go back up again for me to have an opportunity to add to my short position, or even to have a starter position up this high. So that's the first thing I could have improved on, but obviously that was out of my hands, so I couldn't have done much about that. So to compensate for that, what I do is I take a smaller position. So in other words, if I don't get the best possible entry, not through my fault, but because of just the way that the stock acted, but I still think it's a good, worthwhile investment, I'll take a smaller position. In this case, where are we? And actually in this case, because I took 500 shares, which is a massive position. Now I'll explain that to you in a minute. So normally I would have taken a smaller position here, say 100, 200 shares is what I would have taken if I couldn't get a good entry based on my own fault. In other words, I missed it. But because the stock didn't actually get up there, or the price action didn't get up that high in order to give me that entry, what I did was I played 500 shares simply because of the psychological level of that $50 mark. And I've seen this time and time again. When you get these round numbers, whether it's on Nvidia, whether it's on Momo, whether it's on a number of these higher price stocks that we've traded, and this is a higher price stock, you will actually, and I was looking at the float. The float's 488 million. So when it breaches that, there's a really good chance it'll go quite a bit lower. Now I don't mean 10 cents. I mean like 50 cents. A dollar, if not a bit more. So that's why I took 500 shares in this. Simply because I thought it's a good bet. The worst that can happen is I'm going to lose 50 cents on 500 shares, which is $250, which is a lot. And that's over my maximum risk level. But because I was quite confident that it was going to breach at $50 and break that, reject that, that's why I went a bit bigger in. Now, obviously, hindsight, we can all be clever and say, this was not a very good trade. But on the surface, you may think that because I got stopped out a few minutes later on for a loss of that was $160. But then when you consider that I got in here again, and it started cracking and it broke below the 50, then that is a good trade. So the point here that I'm trying to make is maybe slightly convoluted, is that I could have held on a little bit through some of the pain because it didn't get to my stop loss. But what scared me out was that I was already down $160, which is my maximum loss is $100 per trade. So because I was over my maximum, that's why I decided to get out. Now, I made a couple of mistakes here. The first mistake was that the size was too big, because if I can't hold through a pullback, and if I can't hold through some pain, and I'm getting uncomfortable, it means my size is too big. It's as simple as that. I mean, there's no other ways about it. So I guess I had slightly blinkers on here thinking, it's the $50 mark, it will crack. Now, if it had cracked and it had gone to $49.50, everyone says that's a freaking awesome trade. But, and that would have been a really good profit. If I had done the same thing, but just taken 300 shares rather than 500, that means that this, what I was stopped at, so what's that, 300 shares rather than 500. So my loss would have been just a little bit over half. So let's say my loss would have been $100. So the point is, if I had taken 300 shares, this price level at which I got stopped out would have been $100. In other words, I wouldn't have stopped out. I would have let it go on maybe a couple more cents up, and then it would have started going down again, which means I would have been in the green and I wouldn't have lost $160. So the point of this is that size really makes a big difference to your risk level and your comfort zone and your psychology, because even though I wasn't looking at my unrealized loss or profit, because I have that hidden, I had a quick look just to see where we were, and that kind of freaked me out because I knew I took a really big size on this. So for the next time, even though I thought this was a really good setup, I'm going to be a little bit more careful with size, because you can always add. If this had cracked 50 and gone down to $49.80, there's no reason why I couldn't have added another 200 or 300 shares onto that. Now my average would have been slightly higher, but I would have been in the right trade. So the point here is slightly smaller size, unless you're really experienced, which I'm not yet. you know, slightly smaller size you can always add, because if you take too big a size and it goes a little bit out of your comfort zone, you start panicking and you start freaking out, and you cover for a loss. So that's the big lesson on AL, which is a good lesson to have. So moving on, HAIN is one of the trades that wasn't taken by the community of traders I'm in. I took this pretty much on my own, and once it cracked, so it opened up the first 5 minutes, and it was a bit wicky. You could tell it tried to make a new high and get past the pre-market highs here, but it didn't have enough strength and momentum to do that. And then as it broke down below the VWAP and below the 9 and below the 20 and below the 50, I thought, wow, this has gone through like 4 levels. You know, you've got your 20, which is your orange line, you've got your 9, which is your light blue, you've got your thick blue, which is VWAP, and you've got your 50. You know, this is a pretty strong signal for a stock being quite weak, you know, excessively weak. And so I shorted here, which is a really good entry. You know, you could argue I could have gone, I got in at $34, I think 17 or 14. You know, in a perfect world, I would have got 34, so maybe 20 cents higher. And then, you know, I covered, I think, half here and another half here now. And now you may ask, why did I cover here specifically? Well, you see this purple line? This thin blue purple line is a 200-day average. And normally these things have quite a strong influence on a price. And so because this was so low, because it had fallen so much already, I thought it's going to bounce off here. That's why I covered, because I didn't want to, because I knew I was already down $160. I wanted to make sure that, you know, I regained some of that loss back, which is also very psychological. You know, if I hadn't seen an unrealized loss, if I had let the first trade go of AL, then, you know, this would have been just a lot easier to manage, because I probably wouldn't have covered here. I mean, I would have covered, but not half, probably a quarter, and I would have let the rest ride, which I didn't do. Sorry guys, let me take a step back. I left a tiny bit at the end, which is about, I think, 50 shares or 75 shares. So I left a tiny squidget on it at the end. But if I had been more confident, I wouldn't have taken half a position off here. I would have just, you know, taken a little bit off and let the rest ride, especially since it is so weak. So that's another lesson. You know, if you don't look at your P&L and you don't know what state you're in, it can have a really good influence on how you're doing, because you won't get affected by your P&L. Once you're affected by your P&L, it's really difficult, because you've got the number in your head. You know you're down $160. Every decision you make from then on is in some way influenced. So one lesson to take away is don't look at your unrealized P&L if you can help it. You know, if you're good at maths, you can roughly work out where you are anyway on the day, just by the prices you've entered and the size you've entered. All right, now I'm not going to wobble on because I've only got 2 minutes left. ORCL. Okay, Oracle. This broke down nicely. This was another opening range breakdown. We got in here as it broke the 9 moving average and the VWAP, and once again the 50-day moving average. So this means that, you know, the 50-day moving average, once you break that, that means that the stock is pretty weak. And now getting in here, was it $51.30 or thereabouts, and this really fell very quickly. And I traded this twice. I covered half here at $50.80, and then I covered the rest at just under $50.50. Now you got to remember, once again, these $half marks and these full dollar marks, round dollar marks, they have a bearing. And, you know, $50.50, once it breaks that, it can go quite a bit lower, but you never know. You know, it can have a lot of buyers just under that 50-cent mark. So that's why I covered the half there. And then when I saw that it couldn't even get close to going up to the VWAP or having a bounce back, I shorted this again, but this time was a much smaller size. I think it was 200 shares. And then I got out in 3 small lots there. So that was it for ORCL. A really good trade. And then WB was the crappiest trade of the day, if I'm correct. Yeah, I lost $148 on it. I made most of it back, but not quite. Once again, I shorted here and I got stopped out as it was about to cross the VWAP, which was a good exit sign and a good exit. And then I got in here again thinking it's going to finally crack. But once again, it didn't really crack at all. I made a little bit of money, covered a little bit, but in a day ended up being red on that name. So overall today, some good lessons in terms of size management. Hope you guys have a great day, and I'll talk to you tomorrow. Cheers. Bye.